Here's this week's Crypto News 24 with the latest developments in the cryptocurrency market. Bitcoin is once again stealing the spotlight today. As of now, BTC is trading at $92,388, up 2.5% from yesterday. After briefly dipping below $90,000 following the FOMC announcement, it has been rebounding during U.S. trading hours. The trigger for the drop was the Federal Reserve's third 25 basis point rate cut of the year, approved on the 11th. While this matched market expectations, traders labeled it a hawkish cut due to differences in the Fed's tone and a slower-than-expected pace of rate cuts projected for next year, which triggered heavy selling pressure. However, analysts point out that the recent recovery is not driven by strong buying, but rather by a reduction in selling pressure. This is largely because market liquidity has shrunk dramatically. One reliable liquidity signal, stablecoin inflows to exchanges, has fallen from roughly $158 billion in August to about $76 billion this month, nearly half. This liquidity drought means there is insufficient fresh capital flowing in to sustain higher prices. Until new liquidity returns, Bitcoin's upside is likely to remain shallow. From a technical perspective, BTC has failed 3 consecutive times to break above the $93,000 level, indicating mounting selling pressure. A bearish rising wedge is also forming. A break below it could send the price toward the quarterly low around $86,000. To regain a clear bullish structure, Bitcoin needs a weekly close above $90,000, ideally near $93,000, and then build a base to attack the $96,000 breakout zone. On the regulatory front, the U.S. is making progress. On the 11th, Senate Banking Committee Chairman Tim Scott held productive talks with banking executives regarding the Clarity for Payment Stablecoin Act, also known as the Crypto Market Structure Bill. Chairman Scott stated that the bill is steadily advancing and will solidify America's position as the global center of cryptocurrency. The remaining points of contention involve regulation of stablecoin yields and decentralized finance. Traditional finance continues to embrace crypto as well. Bank of America, managing roughly $1.7 trillion in assets, is reportedly preparing to launch Bitcoin collateralized lending products. The bank has already authorized its wealth management advisors to recommend Bitcoin in client portfolios and has granted access to major Bitcoin ETFs. This marks a pivotal moment in which Bitcoin is being upgraded from a speculative asset to an institutionally recognized credit-rated asset. Michael Saylor of MicroStrategy noted that major banks are shifting from hostility to welcoming stances toward crypto, significantly compressing the timeline for full traditional finance integration. In other news, YouTube now allows creators on its video platform to receive payouts in PayPal's stablecoin, PYUSD, currently only available to U.S. users. That wraps up today's Crypto News 24. See you next time.